Hey there, it's Matt Santacapita from the Santa Sells Houses team, and this is another episode of our Monday Market Update. So we are, I guess, 3/4 of the way, roughly, through March. Looking outside, weather looks okay. We didn't get a snowstorm this weekend, so hopefully that means the nice weather is right around the corner. So let's jump into the numbers. New listings this past week came in at 133, conditionals at 61, and solds at 116. Now, a couple things to note here. New listings, pretty common around right now that we've seen for the past 2 months is this range of around the 120 to 130 mark. We had a couple weeks there, we went into the 140s, which is nice, but we're not seeing this huge growth in listings, which is kind of interesting. And then when you look at conditional sales and solds, they are growing. They're growing faster than new listings. So that means finally what we're seeing is that pent-up buyer demand. They're either finding the home for sale that they want, and quite possibly they've been looking for a while and that right house just hasn't presented itself, or that people have finally accepted the new reality of where we are with mortgage interest rates, which I think it's probably more so that. One interesting thing we've seen over the past couple weeks is 5-year fixed rate money has dropped a little bit. That is due to the U.S. Banking crisis, let's just call it that. For those of you who do not know, there are 3 American banks that have essentially gone insolvent. And now that contagion has spread over to Europe, and there's some interesting stuff going on in Europe with Credit Suisse and UBS. So prediction for that, I think long-term money, we're going to start to see it downward pressure. So I do believe we're going to start to see 5-year fixed rates drop a little bit more. They're not going to drop anything crazy yet, I don't think. And a couple dates to look out for: March 22nd, which is the U.S. Fed, so that's their next rate announcement. I do think they're sadly going to do another 25 basis points unless something extremely major happens in the banking sector in the U.S., which oddly the other week that was some major turmoil, but I don't think it was enough to scare the Fed from easing rates. They are trying to fight inflation, and I don't think they actually understand how to fight inflation right now, because this is supply chain caused inflation and conflict caused inflation. And it's very different than the kind of previous scenarios that we've seen, whether or not it's the '08 financial collapse, the dot-com bubble, all that kind of stuff, the oil embargoes in the 70s and whatever. So the other date to put on your calendar is the Bank of Canada rate announcement, which is on April 12th. I'm not sure I'm comfortable yet saying what I think is going to happen during that rate announcement. I do hope, and this is cross your fingers, I really do hope that the Bank of Canada either does no rate increase or that they drop 25 to 50 basis points. From talking to people, I think it is very apparent that everybody's feeling pinched and squeezed, however you want to word it, with these rate hikes that they've done, and they just went a little too high, a little too quickly. So I know it's not helping the housing crisis that we have, which is Canada never has enough houses. This is not helping builders and developers build more homes. So anyways, if you have any questions, feel free to shoot them off. Again, it's Matt Santacapita from the Santa Sells Houses team. This has been another episode of our Monday Market Update.